Hello, everybody, and thanks a lot for having us. I'm Giovanni, co-founder and CEO of MoneyFarm. Let me first tell you why we are here. If I can move the slide. There you go. So first of all, we've discussed a lot about fintech innovation, but rarely about money and actually wealth. And we believe that wealth is really important, and it's actually one of the most important things of the least important things. And we also believe that very few people act on this statement. We probably know it's true, everybody agrees to it, but really, we don't really act on it most of the time. And very few organizations that actually help us manage our wealth and manage our money really hold this as a high regard. Now, what we want to do is really try to deliver the best solution to what we think is the end game, so increase and protect the real value of our wealth through time. MoneyFarm today is a platform which is mobile and web that effectively offers tailor-made, discretionary managed portfolio of ETF. This is what we believe your relationship with the wealth management should look like going forward. Now, this is a huge problem. This is the number of assets in Europe. It's a problem that has been here for ages. Actually, I was just reading yesterday night that the first mutual fund was invented here in 1774, so almost 240 years ago. And it's an industry that we actually now know it doesn't really create that much value long-term for the customer. Now, of course, this translates into a huge business opportunity. Just in Europe, we're talking about 12 billion of profit just for the asset management, which basically means that we could pay off Greek deficit every year and still keep half of the profit for ourselves. So it's a huge pot of money, and it's a huge cost that is inflicted upon our saving. Now, this is something that has been around for ages, and actually Elon Musk tried to change that in 1999. He launched one of the first index funds, and then he focused on payment. And we know Elon Musk is a super smart guy and definitely can execute a startup, but he didn't do that. So why today should be different, basically? And the first point is that today we are in a moment where if I ask you for your money and I charge you for holding your money, I'm just being a bank. We are in a negative or zero return ages, which means that people will have to start to notice how much they're paying. And I was reading the pitch before. I don't believe that paying 200 or 300 basis points per year is a sustainable investment strategy. And there's no way you can achieve those returns for the long term. So people will have to act, will have to do something about it and take notice. The second point is that online investment has been there for ages, almost 20 years. Everybody has access to a trading platform. Thanks to the banks such as ING, even non-self-directed has started to use or buy saving account or saving in investment products online. The third point is around technology and the use of passive instruments, which now are commonplace, and the end consumer knows about ETF and knows what they are. Plus, we do have the technology ability to attract and create effective acquisition channel on one hand and deliver the right solution for the customer. The fourth point is actually regulators, which everybody now understands that we have to tackle this issue. Otherwise, in 20 to 30 years, everybody's going to have a problem with their pension, and we can't just afford that as a society. So regulators are actually helping us in a sense from the UK standpoint, but also across Europe. MiFID II is a great example of something that should favor our business model. And the fifth point is, of course, banks and traditional asset management and wealth management are kind of stuck in the traditional innovator's dilemma. They're used to high costs, they're used to a distribution which is expensive, and it's very difficult to move back from it, at least in a fast period of time. Now, our product is fairly simple. Actually, one of the things that we want to stress is that simplicity is the key around what we're doing, and it's actually one of the key to investing. And investing is pretty boring if it's done properly. This is the mobile app. The first thing we do is we try to understand who you are, what's your attitude to risk, and how we can help you, and how we can best advise. We then give you a portfolio of ETF, which matches your risk tolerance and objective, and we try to give you all the right information to make an informed decision, such as what was the historical portfolio, but most importantly, what we truly believe could be the expected return of the portfolio. And this level of transparency, particularly today, it's really difficult because effectively returns are very low. Now, you can manage your portfolio and look at it effectively on your app, make any changes. It's completely transparent. You can see which securities you have in your portfolio. You can fund the account. You can decrease investment. Whatever you want to do is basically just at the touch of a button. And this is what we want our customer to focus on, which is the asset allocation. Because we truly believe, and it actually has been proven, that asset allocation is actually the driver of long-term returns. Now, robo-advisory, or what I would prefer to call is in digital wealth management, it's really at the beginning, if not even 1% done. Because if you think about it, we started with the first bit of the puzzle, which is, I have some cash, what do I do with my money? But in reality, what we want to do is deliver a solution that helps you across all your life, or your life cycle. So accumulation product, decumulation product, pension, all the things that you need to really be comfortable that your wealth is managed in a proper way. If you think of MoneyFarm 5 years from now, you should think of the place where your money goes and are managed according to who you are and what's your goal in life. Thanks you very much. Italian.
That's Italian precision as well. Precision. Great. Thank you very much for that. Questions from the judges. Who would like to start?
You have launched in Italy and recently opened the activity in the UK. What next? Do you plan to scale to grow with geographic expansion, or focusing on certain geographies and grow other ways?
So we do believe that Europe is a level playing field, particularly on investment. And as number 26, we think that we could leverage that structure across European countries. And also our client of the future is a guy that might have worked in Italy for a few years, then went to the UK, then going to another country. So mobility we need to create a proposition for those kind of customers. So hopefully we are learning in two different markets, which is Italy and the UK, and we will be able to exploit those learning in the next few years to actually develop across Europe.
Maybe a general question. What was it like launching a fintech company in Italy?
So it was pretty complicated, but I guess launching a fintech company everywhere is pretty complicated. Luckily, we had the support of actually one of the only real investor in Italy, which is United Ventures, which supported us from the beginning. Italy is a peculiar market because it's a very big market and it's very expensive for asset management products. So we're talking about $1 trillion plus pot of savings that can be addressed. But in the end, I think going in Italy help us make us tough, and if it doesn't kill you, then it makes you stronger. So I guess we are stronger.
We have heard from Andreas before that his gross margin, correct me if I'm wrong, was 200 basis points with a model which is empowering investors. Your model is a bit different. What is your margin?
I would disagree with the 200 basis point thing. Actually, we charge between 50 and 70 basis points, depending on the countries. And I think anybody should pay less than 1% tops for managing his money if you want to have any real chance of achieving long-term returns.
I think it would be fair to now hand the mic to Andreas again. Sure, you have a statement on this one.
Well, I think it's completely complementary. I think most of the money should be invested in companies like yours, because passive is king in the long term. But it also makes sense to have diversification of trading style and have a kind of satellite in active products. And one of the laws of nature for me is that man wants to play. And there is always demand for your individual luck, and there's always demand for active strategy. And the more money is in your products, the more exciting is the active part. And if a customer makes 50 or 100% profit with an active strategy, he's happy to pay 200 basis points.
Yeah, there is a big if in the initial part of the sentence, which means that, of course, there are clients who does that. There are people who goes on eToro, and you pointed out rightly, there is more of a betting kind of site than an investment site. But if it were my money, I just wouldn't do that. But I do agree there is a market for it, no doubt.
Okay, any more questions? I think we again would have time for some from the audience, if there are any. Any hands? The gentleman up here? Oh, okay.
The question is, of course, if everything in the world is run passively, how do you ever get your money or your company sold in an IPO?
So, first of all, I think that not everything in the world is going passive. I mean, there are great funds out there, and there are very smart people who can manage money and make a difference. Now, what I do believe is that the majority of people cannot make a difference, and having an industry that, on average, because if you include the cost of fee, doesn't deliver the return, it doesn't really make sense. And particularly for the kind of client we have, which is the lower end of mass affluent, people with 50, 100, 150,000 euro to invest, they shouldn't focus on picking the right fund manager. But I'm pretty sure that maybe pension fund or other kind of investor, they should spend their resources in doing that, and there will be people who will always do that in the next 20 years. Maybe they won't charge 3% or 2.5%, but that's a different discussion, I guess.
With about 3,000 ETFs in Europe, how do you segment or choose the ones to offer your clients on the platform?
So this is actually one of our core process. We do a strong ETF due diligence that overlooks from liquidity to cost to tracking error to the collateral, if there is one, liquidability of the instrument. So we really do have a due diligence process in place, and it's basically, I guess, 20 to 30% of the team is dedicated on that in terms of the asset allocation team. I also want to stress that we don't use any leverage ETF at the moment, any short ETF. So if we reduce trying to keep as simple as possible using main indices that are available out there, basically.
Okay, time for one last question. If I see a hand right now, otherwise no, then thank you very much, Giovanni.
Thanks a lot.